Been a while.
I think Dean will
I
start.
know.
And then we've got
Sure.
is here as well.
So restricted.
I'm going in style with the Zoom clip on.
Dean's on.
Yeah, Dean's on. I'm
So,
triple
It's your
checking
clip-on.
everybody.
for the audit,
I don't even have to hit the top button.
Yes, sir.
You should market that, the Zoom clip on.
as well.
Yes, sir.
When I
And
searched
then harassment.
Amazon, most of them said they were
yeah,
police
yes.
uniforms,
Yes.
which makes sense, right? You don't want.
Yeah.
Yeah.
Oh, that's a good idea.
Jess, it sounds like Aaron got it, so he should be joining us here shortly.
Oh, he's
Yay, and I
there.
see him there. I'm glad you joined us, Aaron. Try again so I can make sure I can hear you.
Can you hear me now?
We can, thank you. Are you both comfortable with sharing your screen, or one of you sharing your screen for this presentation, or is that correct? Randy, Aaron?
Yeah, I'm able to share mine when it's my turn, and Aaron, I can share both, Aaron, or you can share the wrap document. Aaron's gonna cover the final communication, the wrap document, and I'll cover the financial statements.
Okay. And we can flip back and forth if we need to, too. Not a problem. I just want to
Yep.
make sure you guys are good with that.
Yep.
How do you share this screen?
It is,
There should be a green button.
Oh, I see it.
we're just going to take just a moment or two here for everybody to get settled. And for those of you that don't know me, I'm Jess Humphreys. I am your moderator tonight, and in this room with me, I have Shane, our town manager, and our mayor, Paul Regemeyer. Give just a minute for everybody to connect here. I'm counting heads. Dean, were you expecting Carl at all?
I saw him on there a minute ago.
Oh, I do, okay, I see his name, I just don't see audio yet. Carl, can you hear me?
Yeah, I can hear you, Jess.
Wonderful, okay. Ken, can you hear and see us?
I can, thank you.
You're welcome. Mr. Talon, can you still hear and see us? Yes? Is that a yes? I'm sorry, you were on mute.
Well, he's responding to your question, so I think I
Okay.
can hear you.
Mr. Sosowski, can you hear and see us?
Yes, ma'am.
Mr. Wilson, can you hear and see us?
Yes, ma'am.
Thank you. Mr. Carpentier, can you hear and see us?
I can.
Yes, I can hear you.
Okay, there you go. Thank you, Victor. All right. We'll just give it a moment here.
I think we have a Wi-Fi issue here. I've been having some.
I'm not connected to it right now myself.
Looking good, Barry.
It says I'm connected, but,
I had to restart myself 3 times when I came in.
I kicked myself out of the Wi-Fi and logged back in, and it
like, do what? No?
just.
Oh, wait, I'm back in.
Disconnect.
Yeah. So,
Let me see if I'm in. Sorry, guys.
oh no, we all had the same struggle this morning. I thought it was because I did my update on Friday and it shut me down, so I thought.
Oh,
great.
the update.
Oh my god, that was, what a nightmare that was.
Within 10 minutes of each other, Bill got a call from 6 of the stations, and none of them could VPN in or get in, and he had a piece of hardware go down. So it's in the weather.
I'm connecting to Zoom. Hello. Give me a second here, Jess. I'm not
You're fine.
gonna make it through 2 meetings right now with my battery.
We like to keep it spicy.
Just like the Wi-Fi?
Yeah.
Good. Everybody likes a little spice.
My daughters went to the rec center and worked out today. Signed up online, everything went smoothly.
Yeah.
We're happy.
Hey Barry, this is Shane. We're gonna get you a report, probably tomorrow morning for the board to just let you know how the first day went. I can tell you town hall, our phone's been ringing off the hook all day long because if all of their lines are full, it automatically rolls over to town hall. And it's just been, the community's been extremely excited to get back in there. So, Seth's gonna kind of look and see what challenges we had. And I can talk a little bit more about that probably tomorrow, but it was open and, to the extent that, it seemed really, like a lot of activity when I took the tour around noon.
Yeah, they had a little trouble signing up, and I'm not sure, maybe it just wasn't real mobile friendly. Maybe it's easier on the computer, I don't know, I didn't try it myself.
Okay, well, if, please forward whatever issues, if you could do that. I know we had some issues with the, outdoor pool sign up this weekend, and staff worked on that. So if there's any glitches, just please let us know. We're trying to make it as user friendly as possible. So if you hear anything, please don't suffer in silence, let us know and we'll work on it to make it better.
Whenever you are ready, sir.
Sorry, I didn't know if you was gonna comment back to that. All right, welcome everybody. Good evening. Tonight's work session we'll call to order here for Monday, June 8th. The goal of this work session is to have the town board receive information on topics of town business from the town manager, town attorney, and town staff in order to exchange ideas and opinions regarding these topics. Any member of the public in attendance is asked to be recognized by the mayor before participating in any discussions of the town board. On tonight's agenda, item number 1 is the 2019 Audit Wrap-Up, and Mr. Moyer, I believe you're going to take it from here.
Yes, thank you, Mr. Mayor. As you said, tonight we will be presenting our 2019 audit. Here to do that tonight is Randy Watkins and Aaron Hoyt, who are representing our independent auditing firm, Anton, Collins, and Mitchell. And with that, we have 2 parts of this. We have first the audit wrap-up, which is kind of a condensed findings of the audit report itself. Both were in your packet. And that being said, I will turn it over to Randy or Aaron going first here.
Thanks, Dean. I'll just kind of do a quick intro, but I'll have Aaron kind of share with you his role and give you his intro as well. He'll start us off by reviewing the audit wrap document, and then I'll go over the financial statements. But just wanted to thank you for the opportunity to present the financial statements to you tonight. They're in draft format, but we're virtually done. And wanted to thank Cheryl and her team and Dean for their efforts in getting us prepared for the financial statements. It's a lot of work, so just wanted to acknowledge that as well. And with that, I'll turn it over to Aaron, and hopefully we can both figure out how to get our screens shared. So Aaron, I'll let you share the wrap document so that you can kind of navigate through it yourself. And then I'll do the same with the financial statements.
All right. Let me know if you guys can see that.
We can, Aaron.
All right. So as Randy said, my name is Aaron Hoyt, and I'm the senior on the engagement. I've worked on the town of Windsor for a number of years now, even going back to when I was an intern, and I always enjoy it. It's a fun time. I want to reiterate what Randy said with Cheryl and Dean and their team. They did a really fantastic job this year. getting us what we need. We have a lot of requests, a lot of emails, and they're really what made this audit go well. Without them, it wouldn't have been possible. And especially with COVID-19 and all the challenges with that, they had to get us more support than usual digitally, and that meant more scanning for them and just tracking down what we need to get it to us. So I just want to reiterate that they did a great job. So tonight I have the audit wrap-up communications that I get to share with you. We'll kind of skip over the first few pages. This is just a cover letter intro, and then we have the discussion outline for what we're going to talk about. This page is the status of our audit. Is that big enough for everybody to see?
I can see it. It looks like about 4.5 point font. Oh, there.
Is that better?
Now we're up to 6.5.
Okay. How about that?
That's good. Thank you.
All right. So this is the status of our audit. We substantially completed our audit of the financial statements for the year ended December 31st, 2019. Our audit was conducted in accordance with auditing standards generally accepted in the United States of America. But this audit does not relieve management or those charged of governance with their responsibilities. The objective of our audit was to obtain reasonable, not absolute assurance about whether the financial statements are free of material misstatements, whether due to fraud or error. And the scope of our work was substantially unchanged from our planning communications that we previously sent, except in light of COVID-19. We had some additional procedures that we had to perform over going concern to determine if the town had the ability to continue as a going concern. And we didn't have a going concern issue noted for that. We also had to do some additional change in our procedures just because we were working in a digital environment and getting support scanned to us. We do expect to issue an unmodified opinion. That's a clean opinion, which is the opinion you're looking for. It's good. And our responsibility for other information included in the document. There's some additional information, including with the basic financial statements. Some of it we issue an in relation to opinion, and some of it we just compare for consistency. We tie it down to accounting records and to the financial statements themselves. And we didn't find anything in terms of inconsistencies, and management helped us work through that. All records that we've requested have been made freely available to us for inspection. And as we mentioned previously, management's cooperation was excellent. Any questions on that? All right, the results of our audit. In note 1 to the financial statements, you can find the town's accounting policies and practices. And there were no significant changes to these accounting policies and practices during 2019. There wasn't any new standards to implement, anything like that. And so if you're familiar with how the financial statements have looked previously, they will look very similar for the current year. We did have some primary areas of focus and considerations.
Hey, real quick, Aaron, let me just interject on that one real quick. And Aaron will touch on this when we get to a later slide on resources, but there were some GASB standards that would have been effective for the town in the current year, but the GASB issued statement 95 a couple weeks ago that provided some delays in required implementation dates. For example, the fiduciary activities standard would have been effective for this year, but with the deferral, it's not effective until a fall. I think it's been deferred for at least 12 months. So there's a number of standards that would have been effective for the current year that are getting deferred because of that GASB 95 that was issued in relief relating to the COVID-19 pandemic. So just wanted to mention that. So go ahead, Aaron.
So some of the primary areas of focus for the audit, first one was revenue recognition. And so the town's major sources of revenues consist of property taxes, sales and use tax, intergovernmental grants and contributions, charges for services, and these revenues are recognized when earned. So we focused on that. Accounts receivable and allowances, this is a key area, and we evaluate the town's estimate for collectability of these balances. We found them to be reasonable and appropriate under the circumstances. Capital assets and depreciation continues to be a significant and material area. We pay particular attention to the cost of newly acquired capital assets, repair and maintenance expenditures, and depreciation expense for these assets. Bonds and notes payable, that's additionally a significant area for the town. We've applied certain procedures over the balances, future maturities, accrued interest, premiums, and deferred charges and costs associated with these bonds. It appears that the town is properly accounting for these obligations. And then pension reporting, the town does have a defined benefit pension plan for the FPPA, Fire and Police and Pension Association of Colorado. So we perform certain procedures over those as well. Evaluation of going concern, there were no going concern issues noted during our audit. And then estimates were deemed to be reasonable and free of bias. Any questions on those?
Mr. Kozlowski, you had a question?
Yeah, actually, I guess maybe two quick ones. Randy mentioned that there were some GASB standards that simply were not applicable to this year, but were going to be. But I'm guessing since they were deferred, you all did not look at those from an audit perspective. But I guess I'd like to ask Dean, Dean, are you familiar with these new standards that will likely come up next year? And are we in good shape in terms of compliance at this point, or is there work to be done?
Actually, real quick, before Dean, we did do the work actually, and I think we probably would have been in a reasonable spot to implement along with everyone else. Typically, our firm encourages organizations to allow others to learn from the implementation before we try to figure it out ourselves. So we were, there was work done on those standards that would have been effective, and many of them wouldn't have had an impact. But this giving us another year to see how others have adopted them, particularly the fiduciary activities. It's such a complicated standard, and making sure that others have kind of worked through some of the bugs with implementation before we do it or you do it was kind of our recommendation. But I'll let Dean answer the rest of the question. I just wanted to mention that it's not that we didn't do anything on it. We elected to take advantage of that opportunity.
Did that cover it for you, David, or do I need to expand on that?
Well, I guess I had asked you specifically if you were aware of these new changes, and are we aware and reasonably working toward compliance?
Well, to be honest, I did not read the whole thing, the standards themselves, but to echo what Randy said, we already are complying. We were not required to report on them this year. So if I look back to when they GASB implemented that GASB 34 a few years ago, we took a similar route where we were able to delay another year to make sure that we understood it and complied, and then the following year, when we were absolutely required to report, we reported it then. So I guess my short answer to all that would be yes.
We're prepared. And I guess the second question, just Aaron, at the end, you were talking about the primary areas of focus, and I'm looking at the bonds notes payable in particular, where we've got a combined roughly 25 million of debt service of some kind. But then it sounds like you have no concern in terms of our reserves or otherwise ability to meet that debt service over time, or it would have popped up as a going concern issue?
Yeah, we don't have any going concern issues noted, and the future maturities we've looked at, and they're disclosed in the financial statements. So we have no going concern issues at this time.
And I'll go over some of that when we get to the financial statements. You'll see that if you look at your unrestricted net position and
Bless you.
your
Bless you,
available your available fund position, you'll see that you're in good shape. Now, I think everybody's going to be. We did with all of our governments. We did some enhanced procedures around going concern, particularly with respect to what we know now, at least, of the potential impact of coronavirus pandemic, the COVID-19 pandemic. I think there's still a ton of uncertainty. You'll see when we get to the financial statements, there's an emphasis of a matter paragraph and a subsequent events disclosure around that. I still think from a going concern position,
Right.
we're not worried that the town won't be here 12 months from today,
Right.
or the government of the town won't be here 12 months from today. But I think we all know there's going to be an impact. It's just how dramatic is still uncertain. So,
Okay, thank you.
All right. Now moving on to the results of our audit. We did have some adjusting journal entries, and they are attached to this document in the final pages. And I did want to mention that there are no uncorrected misstatements. So all of the recommendations that we had for adjusting journal entries have been posted and are reflected in the financial statements. For the quality of the town's financial reporting, a discussion was held regarding the quality of the town's financial reporting, which included the following: qualitative aspects of significant accounting policies and practices, our assessment of critical accounting policies and practices, our conclusion regarding significant accounting estimates, significant unusual transactions, if any, financial statement presentation, new accounting pronouncements, and alternative accounting treatments. Any questions on that? All right.
Mr. Hoyt, I don't see any questions by anybody else on the panel.
Okay. And feel free to interrupt me if anybody does have a question. I'll try to stop periodically, but if you have a question that you want me to address immediately, just let me know. Internal control over financial reporting. In planning the audit, we do consider internal control to gain an understanding, but we do not express an opinion on internal control. We do express an opinion on the financial statements as a whole, but we do not express an opinion on the effectiveness of internal control. With that said, if we find any deficiencies within internal control, we're required to report those. And there's pretty much 3 levels that we categorize findings into. And they're seen here below. The first one is a material weakness. And this is the most severe. It means that a deficiency or combination of deficiencies in internal controls exist, or it's reasonably possible that there is a material misstatement in the financial statements and that it would not be prevented, detected, or corrected on a timely basis. The next level is a significant deficiency. This is less in scope than a material weakness. It's less severe, and it is important enough that it merits the attention of those charged with governance, so we would still report it to you. And then the final level is a deficiency in internal control, and this is when the design or operation of a control does not allow management or employees in the normal course of performing their functions to prevent or detect or correct material misstatements on a timely basis. So basically, there's a way to improve internal control so that it would be more effective. And so—
Mr. Hoyt, can I interrupt you there really quick? Mr. Szlowski, if that's a good stopping point for you. Mr. Szlowski has another question.
Yep.
Yeah, hey, thanks. Aaron, it seems odd, you've identified these 3 categories, obviously. in terms of level of significance. But below all of that, you say that you noted no material weaknesses, but it doesn't say anything about whether you identified significant deficiencies or deficiencies in control. Now, I appreciate that if they exist, they certainly didn't rise to the level of becoming material weaknesses, and you've identified that. But did you intentionally not speak to?
Yeah, I'll take this real quick, Aaron. So for whatever reason, our professional standards permit us to say we didn't identify any material weaknesses, but we can't say that we identified that we did not identify significant deficiencies. However, if there had been, we are required to communicate to you, the board, those charged with governance. Those charged with governance is a term that we use to broadly define who is in charge of running the organization, and in your case, it's the board, the town board. If it falls into either the significant deficiency category or the material weakness category, we are required to communicate those to you. And so had there been any significant deficiencies or deficiencies in internal control that we elevated to that level, we would have included them in this written communication. There were some minor control deficiencies, and those we're required to discuss those with management as part of the audit, but we wouldn't include those in a formal communication.
Okay. Got it. Thank you very much.
Yep. Go ahead, Aaron.
Yeah, so the last sentence, I was just going to say that we did not identify any material weaknesses. However, material weaknesses may exist that have not been identified. So we didn't have any findings to report in that section. Here are some other required communications. There are no significant changes to our planned audit strategy or significant risks initially identified and previously communicated to those charged with governance as part of our audit planning communications. However, as you mentioned before, in light of COVID-19 pandemic, we performed additional procedures over assumptions in determining the town's ability to continue as a going concern entity. There were no matters noted relevant to the audit, including but not limited to violations or possible violations of laws or regulations, risks of material misstatement, including fraud risks, complaints. There were no specialized skills or knowledge needed outside of the core engagement team. We've evaluated the town's process for identifying, authorizing, and approving related parties and disclosing these and the transactions, and there were no undisclosed related parties noted during our test work. There were no disagreements with management about any matters that were not satisfactorily resolved. There were no significant difficulties encountered during our audit. And there were no other matters that we consider significant to the oversight of the town's financial reporting process that we have not previously communicated. Finally, there are some representations that management makes, and you can refer to the management representation letter for these. Any questions on these?
Seeing none.
All right.
Does not appear that we have any questions. Does that conclude your presentation, Mr. Hoyt?
Almost. We have just a couple pages here.
Okay.
Independence. Our audit is independent of the town, which means we are independent in both fact and appearance, as mentioned in our previous engagement letter. And then, as Randy said, these are the GASB standards. He mentioned GASB standard number 95. This is the one that postpones the following statements for 1 year, and then these statements for 18 months. GASB statement number 87 on leases is coming up pretty soon. And basically that's going to move leases that were only hitting the income statement. They will now all be reported on the balance sheet, but there is a materiality factor. So copier leases, small things like that wouldn't necessarily be in scope. But if there's any large leases that the town has, we will have to implement that. But as GASB statement number 95 says, this is deferred for 18 months. And then within the packet, you have the cybersecurity, and it should have these hot links in here, so you can click on them. This is a very hot topic, especially now with COVID-19. Hackers are being extra malicious and trying all sorts of ways to gain access to assets and compromise all sorts of entities. So I would encourage the board to read over some of these materials, think about the way that you guys have controls in place, and if there's any ways to improve those.
And real quick, this is Randy. Many of these resources, or almost all of these resources, are provided through our relationship with BDO. I think we've mentioned this before, but some of you are new. BDO is the 5th largest accounting organization in the world. We're part of their alliance program. And so we work closely with BDO on a lot of engagements and have access to the resources that they publish for their clients. And so we share those out to our clients as well. And that's what this is. So.
And then these last 2 pages are just the accounting AJEs, adjusting journal entries. And that concludes my piece, unless there's any questions.
We're not seeing any. Is there any questions before we move on? It appears everybody understands everything they just saw, so we'll move on to item number 2, which is our 2019 Comprehensive Annual Financial Report. Mr. Moyer, I'll throw it to you to lead off, and you can throw it where you need to.
This is the much larger document in your packet. This pretty much covers everything we did A to Z, and with I will send it over to Randy. It will be his turn to work on the presentation. Go ahead, Randy.
Thanks, Dean. You should be seeing the financial statements. It's a pretty view, I think, from Pelican Lakes, maybe. Are you seeing that?
Yes, very
Okay,
green.
Great. All right. So yeah, this is the comprehensive annual financial report. It is a very large document. It has a whole bunch of information in it. I'm going to cover just a few pieces of it. I'll start with I'll skip past the discussion outline. There's an introductory section with an introductory letter. There's also management's discussion analysis, which follows our audit opinion. I would encourage you to take a look at all of that stuff, but for purposes of the presentation, I'm going to focus on the financial statements and a couple of footnotes, and then I'll be happy to answer any questions that you have that came up in your review. Before I get started, you'll have noted, if you did go through the whole packet, there were some highlighted items that were just some fairly insignificant disclosures that we needed to make sure were updated properly. The document I'm going through tonight has been updated for those disclosures, but the changes weren't significant or dramatic. So the document that you were provided, we wanted to make sure they were in the packets in time, even before we had gotten some of that information. Just wanted to mention that before we get started. So I'll skip to the audit opinion, which is the only couple pages in the document that belong to us. That first section there is just talking about what we are reporting on, the financial statements of the town, which include several opinion units, including the governmental activities, the business type activities, any discretely presented component units, each major fund, which I'll talk about that, and then the aggregate remaining fund information. So anything that didn't make it into one of those opinion unit levels gets aggregated and becomes its own opinion unit. Management is responsible for the financial statements. So even though we assist with the preparation of the financial statements, management does review and take responsibility for the financial statements, and we're preparing them from information that was provided as part of the audit. Our responsibility is that longer section there, and really just describes the approach that we take to performing the audit. Our opinions are at the bottom of that page. As Aaron mentioned, we are issuing an unmodified opinion. However, we do have an additional paragraph that you would have not seen in previous years. Where's it at? Aaron, it doesn't look like we got that one in here. So we'll get this added. There's a very short emphasis of a matter paragraph that it'll immediately follow the opinion paragraph that points to the subsequent events disclosure. Basically, it's an unmodified opinion still. It's not a change, or it's not qualifying the opinion. It's just highlighting for the reader a specific footnote that we think is, from an auditor's perspective, unusual and important for a reader to note. And so we'll make sure that the final draft has that in there. But again, all it says is, as disclosed in footnote number whatever, due to the uncertainties, or there's an additional disclosure relating to the COVID-19 pandemic of 2020. So I'll make sure that gets in the final draft. These last two larger paragraphs talk about the other information contained in the CAFR. So the required supplementary information includes the MD&A, and then some additional schedules in the back, including the budget to actual information for the general fund and all the major special revenue funds, and then also the pension related disclosures schedules that are in the back. There's other information included, which would be the state required documents, the local highway finance report, the introductory section. There's the other budgetary information, any combining schedules. Those are all we issue. It's called an in relation to opinion to all of it, except for the introductory section and the statistical section. Those two sections we just review and make sure there's no material inconsistencies. Any questions on the opinion?
Doesn't appear we have any. Mr. Watkins.
The financial statements. So the first section is the government-wide financial statements, the financial statements of the town as a whole. It's on the full accrual method of accounting and the economic resources measurement focus. So you'll see all assets, liabilities, all deferred inflows and deferred outflows, both current and long-term, are on here. It's organized between the governmental activities and the business type activities. And then you do have one discretely presented component unit, which is the Downtown Development Authority. The governmental funds aggregate into the governmental activities, and there's some reconciling items I'll go over when I go over those financial statements. The business type activities combine all of the enterprise fund activities into a single column. And then those two are totaled for the whole government. Really, all I'd highlight on this is, as I mentioned earlier, your unrestricted net position for the governmental funds is about 9 months worth of operating costs. If we were to look at the statement of activities, which we'll get to next, and then in the business type activities, it's nearly 5 years, but you would expect that because the enterprise funds are fairly capital intensive. You need to carry significant capital for major improvements and things like that. So it's not that you could go 5 years without generating revenue. It's that you've had to build up some additional reserves for those types of expenditures. The statement of activities, which is the income.
Randy?
Yeah.
This is Shane Hale. So could you give some context to the town? I mean, 9 months reserve seems pretty healthy to me, but could you give us some kind of context as far as, I know that auditors are loath to say, rule of thumb, 90 days or whatever, but could you give the board any kind of sense as, what this reserve really means compared to other municipalities and generally for local governments?
Yeah, I mean, I would say we recommend our local governments, other local governments, towns in particular, no less than 90 days, so 3 months. 9 months is kind of on the high end of the range that we would recommend. I mean, we'd say between 3 and 9 months. More than that is fine. I think the intent isn't for the government to accumulate resources over time, but to be in a position to weather any downturns as we are going into now. So, it's not that you're going to stop generating revenue for 9 months, but you will likely dip into that a little bit, as those revenues start to come down over the next couple of years. And so making sure that you have a good runway, we encourage. And I would say that 9 months is above average in a lot of the organizations or cities and towns that we work with.
Mr. Watkins, Mr. Sazlowski has a question for you.
Sure.
Yes, thanks, Mayor. Yeah. So Randy, just to clarify those, I'm looking at this, you've got the total net position of 162 million, but obviously a bunch of that is net investment in capital assets, which isn't particularly liquid, I would assume.
Correct.
So if you're looking at the runway from a liquidity standpoint, would you just look at the restricted and unrestricted net positions? And if so, how long a runway is that?
It's still 9 months. I was only focusing on the unrestricted portion.
Okay, good.
Yeah, you have 27 million, and here I'll just skip ahead. So you have 27 million in unrestricted in the governmental activities, and your total expenses annually is just under 40 million. So you've got 9 months of annual operating expenses in unrestricted net position.
Good. Okay, great. Yep. Thanks.
And you'll see it's even better at the fund level, but that's just because of some non-cash reconciling items. So you'll see that too.
Thank you.
Mr. Watkins, I also have a question from Mr. Bennett.
Okay.
Ken, can you unmute yourself, sir?
That's a good idea. Thank you.
Thank you.
Mr. Soslowski asked the first part of my question. The other thing I wanted to say is more of a comment, I think. I think these assessments are based on current financial, and we're anticipating a possibility of 50% reduction in sales tax, 20% reduction over the next 2 years and property tax. So I just want to be cautious that we don't present an image that we are really in great shape for the next year or two, because we don't know some things out there in the future. And again, Mr. Solosky made the point that some of these funds are not liquid. That was my point. Thank you.
Yeah, I would agree with you. I think you're fortunate to be in the position that you were at 12/31, in that you are able to weather a longer storm than some, without having to dramatically, impact operations. And so I think maintaining that level of discipline in managing the fiscal operations of the organization will be important, obviously, even after we get out of this. So, and this is just proof of why we've, recommended to our clients to build up some cushion for these types of, not that we would have ever expected or anticipated anything like this, but you just never know. And disasters are not a stranger to Windsor, obviously. So, I think you guys have done a great job of managing through several of these types of things. So, again, I think it's just good that you are in that position at 12/31 at least. So, any other questions on that before I move into the statement of activities?
Yeah, I'm sorry I did. Thank you. Thanks, Jess. No, just to really piggyback on what Mr. Bennett said, and I guess the message to me and to the board is we may not be able to control much about the revenue side of the town's financials going forward. So we really got to look at that statement of activities and the expense side and govern those, reflecting, as our visibility of revenues become clearer. So yes. That's our job. Thanks.
Any other questions? All right, so the statement of activities presents the income statement for the town as a whole. Again, it's organized between governmental activities and business type activities. The top section it shows the programs of the town broken out between all the different governmental activities. So you can see those expenses, and then you have charges for services and then grants and contributions that reduce the burden of those expenses. But the intention of the governmental activities isn't for those revenues to fully offset those expenses, and that's why you have program revenues, which we'll get into, other revenues, which are down below. The business type activities, those activities are intended to be funded primarily from charges for services. And so you'll see that the charges for services in most cases exceed or a couple cases exceed the expenses. And there are other earnings that offset that. But the intention within those activities is for the charges for services to primarily cover the costs generated by those. And then the The general revenues that are down below, these are the kind of non-exchange transactions. So you have property taxes, sales taxes, franchise taxes, and other taxes, which are the majority of the general revenues. And then there's also some earnings on investments and other revenues. You've had some disposals during the year which resulted in a loss. That's all also reflected down there. It's hard to show this on a screen because it's 2 pages, but you'll see at the top here, this is the amount that the governmental activities were not covered by other revenue or by the program specific revenues, whereas in the business type activities they were covered for the most part. In total, your net position improved by just over 23 million in both the business type activities and the general or the governmental activities, and that's reflected here. Any questions on this statement? So the next few statements there's none. Okay. The next few statements are the governmental fund financial information. And these, again, as I mentioned earlier, they're organized by major funds. So there's some quantitative thresholds that have to be met for a fund to be major. And if they're not major, then they go into that other governmental funds activity column. And there's a separate schedule at the back that shows where those individual funds add up to this column. These statements are on the modified accrual basis of accounting and current financial resources measurement focus. So you'll notice that there are no capital assets, long-term debt, certain deferred inflows and deferred outflows have been removed. Pension activities are gone. It's more almost like a cash basis set of financial statements. And here you'll note when I get to the next page, the unassigned fund balance is, I think, if I remember right, about 10 months worth of total expenses for the governmental funds. Any questions on the balance sheet? This next schedule shows a reconciliation. As I mentioned, they're on different basis of accounting. So here's where you'll see the capital assets net of accumulated depreciation of 116 million get pulled onto the statement of net position. There's a few other items, the deferred gains and losses on refunding, the pension related accounts, the long-term debt for governmental activities. All that gets pulled onto the statement of net position and increases the fund balance from 58 million to 162 million in net position by pulling all those reconciling items onto the statement of net position. And you'll see a similar schedule when we get to the statement of revenues, expenditures, and changes in fund balance. This is the statement of revenues, expenditures, and changes in fund balance. And here, it's on the modified accrual basis of accounting and current financial resources measurement focus. The changes in fund balance, in all but the capital improvement fund, you had an increase in fund balance. Here's where you'll see there's 19.6 million in total expenditures in the general fund. There's about 3/4 of a year, 10 months of the year included in that amount. Included in unassigned fund balance. The other funds are intended to kind of accumulate their own resources and pay for themselves. Unassigned only appears in the general fund. But again, you would expect a decrease in the fund balance for a capital improvements fund where you're accumulating resources for the purpose of making capital improvements. But to see a positive inflow is a good thing in the other ones. Any questions on this? Here's the reconciliation from the change in fund balance to the change in net position. Again, backing out the capital outlay, which gets capitalized, and then adding to it the depreciation expense. Repayment of bond principal is a expenditure in the statement of revenues, expenditures, and changes in fund balance, but it's a reduction of debt on this schedule. Some various other minor reconciling items. Any questions on the reconciliation? I won't spend a lot of time on the statement of net position, or the proprietary fund statements. They are virtually the same as what you saw in the statement in the government-wide financial statements. They're on the same basis of accounting, same method of accounting. So there's no reconciliations. It should be pretty straightforward to flow those directly in from these statements. I will spend a little time on the cash flow. because this does show you a cash basis kind of changes in cash and where they're at. I like to have boards focus on the state or the cash flows from operating activities. You'd like to see a positive number there in every year. And you can see here in each of the funds, you have positive cash flows from operations.
Excuse me, Randy.
Yep.
Hey, Randy, sorry to bother you. David.
Nope, you're good.
I've got my packet on my laptop. Well, no, I've got your screen on my laptop. I've got the packet of information on my iPad, and I'm trying to track between these two. What page of your document are you on?
41 of the PDF and 28 in the page numbers. So the
Okay,
PDF
got
page
it.
number is 41.
Yeah, got it.
Yep.
All right, hey, thanks.
No problem. So seeing fluctuations in the cash flows from non-capital financing activities or capital and related financing activities or investing activities. Actually, I'll just stick with those two. You'll see positive fluctuation. You'll see fluctuations between positive and negative there, depending on if you're accumulating resources through the issuance of debt or if you're expending resources by investing in capital assets. And so seeing those positive and negatives in those two categories is not a negative or an issue for you to focus on necessarily. Really, the focus should be on those operating activities. The investing activities here again, it's if there's negative cash flows, you're just putting money into an investment account. If there's positive cash flows, you're generating income. So again, you'll see fluctuations there, but it's not necessarily a bad thing. But in total, cash and cash equivalents declined by about 540,000 between all of them. And you also, I should point out, you use pooled cash accounts, and so anytime any individual fund reduces their balance below zero, in their equity in that pooled cash account or pooled cash fund, then it generates a due to, due from between other funds, and you start by reducing the general fund to zero, and then you go to the next fund that can afford to basically be the one loaning those funds to the other funds. So it's not alarming that you've got zero balances in some funds. It just means that their share of equity in the fund, in the pooled cash fund, is dropped below zero. And then we're on to the notes. And in the notes, I skip over the summary of significant accounting policies. Nothing's changed one year to the next in that presentation. The capital asset roll forward is on page 40 of the page number 40 or 53 of the document. And it shows the roll forward of capital assets from the previous year's balance to the current year's balance. So you can see where in those categories the money was spent. You can see where depreciation expense is rolling on to the roll forward, and just kind of see all the different changes. I like to highlight that. I like to also highlight the debt roll forward. So the debt roll forward is at the bottom of page number 42, PDF page number 55, showing the beginning balance in the individual debt instruments, and then the reductions made during the year, and seeing how those get paid off in the amortization schedule at the top of the following page in over the next 5 years, and then in 5-year increments after that. And that's presented here for both the governmental activities and the business type activities. Your pension obligation's fairly insignificant. It actually flipped, I think, from an asset to a liability in the current year. I'll highlight it. You've got about just a little over $200,000 in the pension liability, and then there are these deferred inflows and outflows of resources that exist as of the end of the year and amortize over the next 5 years. The sensitivity analysis is one I like to highlight. The discount rate that's used to calculate your pension liability is 7%. If that goes up to 8%, your liability flips again to an asset of $290,000. If it decreases by 1%, your liability of $200,000 goes up to $800,000. So just showing you some of the impact that particular assumption has on the fair value or the liability of the organization or the net pension liability. And then the subsequent events disclosure. In the past, you would have just seen something like management has, the town is, that first paragraph would have really been all you would have seen unless there were some debt issued or anything like that. But this year we're including this additional disclosure around the uncertainty of the impact on the organization that COVID might have, and just basically calling the reader's attention to that risk, that uncertainty relating to that. That is all I had planned on covering, but are there any questions on the statements that, if any of you had a chance to review, that you'd like to ask me now? Or anything that I have covered that you have questions on?
I'm not seeing any, Mr. Watkins, so with that, I'd like to thank you for your report, unless there's anybody else that has any questions.
Okay, seeing none, I appreciate our work session tonight regarding our 2019 audit wrap-up and our 2019 comprehensive annual financial report. Mr. Moyer, is there anything else you'd like to add in conclusion to this?
What I would add is on your town board meeting agenda, item number C2 is a resolution that we'll adopt this evening to accept this resolution, and we will submit it from there, the required agencies and regulatory bodies. And I would be remiss here if I did not echo the thank yous to Rand, Aaron, and also to the finance staff, and also the staff town-wide. This is a lot of work by a lot of people, and I appreciate that, and thank you for doing it again this year.
Mr. Kozlowski, you had another comment?
Yeah, just a comment, actually, to, in a way, echo what Dean was saying, but I love this document. It's absolutely a Herculean effort by everyone, so thank you for the diligence in putting together a really solid report. Dean, do you have an idea when you would have the final available in paper form?
I would defer to Randy on that.
I think we're pretty close. It goes through our, now that we have a very, very close to final document, we do our internal QC process, which is really just a proofer going through and reading for any grammar checks and things like that, making sure everything foots and crossfoots. So I would guess within the next probably 5 to 7 days. I mean, it's possible this week, but just to give us a little cushion, just because there's a lot of reports going out right now, and so making sure that we give the reviewer time to get their comments back to us. Like you said, it's a Herculean document.
Yeah.
So by the end of the week or early next week would be our goal, I think. Unless, Aaron, do you know something I don't?
I think that's doable.
Okay.
Well, fantastic. And Dean, I appreciate this is voluminous. So if you're preparing paper copies, I would absolutely like to have one, and please add it to my bill, whatever the cost is.
Will do.
Yeah, I bet. Thank you. Thank you.
All right, with that, we will conclude our work session for today, and everybody will need to log off and re-log in under their link for the Zoom meeting for our regularly scheduled board meeting that we will be starting momentarily.